Hey everyone, happy Friday. Friday afternoon for us here on the East Coast. You're just waking up, getting going with work over on the West Coast. And for everyone across the world, I don't know what time it is for you. Maybe you're having your nightly cocktail. We're sitting here today, Milind, Mehere and I, who is founder and CEO of Yieldstreet. I am Chief Strategy and Growth Officer at Money 2020, Scarlett Sieber. And Milind, thanks for being here. We've talked a fair amount over the last few weeks, but I'm really excited about the conversation we're going to have today.
Me too. Thanks for having me, Scarlett.
Yeah. So as you know, one of the things for those of you here and I, who is founder and CEO of Yieldstreet, for those of you who are not aware, Milind and I did a Tech Tuesday interview just this past week, and because of the nature of Tech Tuesday, it was actually a rather short interview, but that sparked a ton of other ideas that I had that I said, hey, well, why don't we extend this, get this live, get people engaged, because you have such a unique background and such a great perspective. And one of the things that really stuck out and resonated with me is that you used the quote, vision without execution is hallucination. And that, I think, speaks volumes. I've met as a former entrepreneur myself, and I've spent so much time looking at the landscape. Of course, we're kind of hardcore in the fintech world, financial services world, but that no words could ring truer, basically. So when you think about back to your journey, when you started off, when you founded Yodel, there was a crisis happening in 2008, right? And you were helping small businesses in a time of need. What were you hearing? What was going on in the world back then? Let's kind of do like a historical perspective for a second. What was happening back in 2008? What were you hearing from small businesses? What was going on?
So, Scarlett, at every point in evolution, right, you think about certain key milestones. There's always exciting things happening. So let's take our audience back to 2005, 2006, when we actually started Yodel. It was a completely different world. Google had just gone public in 2004 and was a small company, market cap of less than 15 billion, if you can believe that world. There was no iPhone. Facebook and Netflix were small and irrelevant. So it almost feels like we were in Stone Ages. But what was happening is online advertising was booming, but small businesses was getting left behind. So my co-founder, his dad had car dealerships, and he was trying to get them on Google, build a website, get traffic to Google, because nobody was looking at yellow pages. And small businesses were too small for any ad agencies to help themselves. And so for us, the whole central premise for Yodel was, how do you build a website presence for small businesses and get them new customers from online search and browsing and stuff like that? And if you know, in 2007, iPhone launched, and that completely changed the landscape. Facebook took off. So mobile and social really converged at local. And so it was a fascinating time. But on the flip side, as you alluded to, we were also entering global financial crisis. And so for us, I think if you think about small businesses, that was really the time for us to help them. And so, we had a sales team. We would really call up small businesses and really try to get them to build their online presence. And, for us, it was some of the strongest years that we had through the financial crisis. So it was both very gratifying on the business side, because we were helping American economy kind of come back and like drive customers into small businesses. But then from a human capital standpoint, hiring a lot of people when there were a ton of layoffs, there were double digit, unemployment. And for me, being an immigrant to this country, it was very gratifying to see that, you're creating jobs in North Carolina and Scottsdale and Austin and of course, our great city of New York. And so it was really a fascinating time to really do that.
Yeah. As the Yieldstreet team just mentioned, first of all, there's so many things I'm going to highlight there. For all of you, please, this is a conversation. We're going to be covering Milind's journey. We're going to be talking about the macro things that are happening in our industry and some of the micro things that's especially in the last week or so. There's a lot that's going to be here. So please ask your questions. I will definitely naturally bring them into the conversation that we have set out here. So when you talked about the idea of being an immigrant, the changing landscape of the US, and the fact that, I mean, I am such a believer in small businesses being the lifeblood of our economy. I talk a lot about this from the community community bank and credit union perspective. But the fact that these smaller institutions, if you think about on both sides, we got 5,000 credit unions in the US, roughly, we got around 5,000 banks. People tend to think of banks as those top 50 names. This is my opinion. They don't necessarily do a great job of serving those small businesses. And so when you look at the lower tail, these, billion-dollar, couple billion-dollar in AUM institutions, they're the ones who are really focusing on small businesses. And if we think even now, going back to like PPP, they're the ones who really stepped up to the plate and helped them. So it's so, as you were talking, the idea of, building online presence for these small businesses. I mean, so much is going to ring true to what's happening with this current crisis, but let's stay in the past for a second. So you were growing and scaling a company when the world was kind of going crazy, and the US especially was going crazy. As a leader, as a founder, how did you keep up the morale with the team? Because I think a lot of these examples and lessons we could talk about today. So what did you do as, a lot of people were suffering? You talked about unemployment and everything else. Here you are building and growing. What was that like? How did you kind of keep up the team's perspective, get them excited about it?
Yeah, I think so. Scarlett, I think a couple of points here, right? So once you think about small business ecosystem, which is so important, but we were at the forefront of that. We almost kind of created that ecosystem. And so if you think about the types of companies that came out of that ecosystem, it was uh, everything from Angie's List, Constant Contact, HubSpot to Shopify, right? Like that kind of created that ecosystem. And so I think for the team, one of the most important motivating factors was that we were bringing some fundamental shift in the ecosystem, which was very, very big. And so I think that really was something that was a driving force for us. And as we were expanding our team, what we tried to do was, the way we inculcated culture is that we moved people from our headquarters to some of our regional offices to seed that office, so that you're transferring the core culture of the company along with the people and build it in the local areas. And so I think that was really something that we focused on to kind of grow and scale. And I think the other big thing was, because from a market perspective, people were looking for jobs, and there was unemployment, and especially in these cities that were not big hubs known for tech companies. So we used to get a lot of attention, right, from the government officials and other people in like Charlotte, Scottsdale, Austin, because again, 10, 12 years ago, these were not known to be big tech hubs. And so for a tech company to move there and create local jobs was really a phenomenal way to kind of think about growing and scaling.
It is so interesting to think about how, this was, like you said, 10 plus years ago, but so much of that rings true now. I was just having a conversation with a colleague of mine yesterday about what was happening in Charlotte from a tech and financial services perspective, because of course, now Truist being one of the biggest banks in the United States, and what they're doing in Charlotte, there's been a lot of activation already in the fintech community there, with players like RevTech Labs and so many others who have their own accelerators. And a colleague of mine said, he's a fintech entrepreneur, by the way, and said,
Yeah.
it's so funny you mentioned Charlotte. I never knew it was a tech hub, but that's actually the tech team that I'm using now is out of Charlotte. So you're seeing that those residual components a decade later, which I love. The other part that I want to highlight on for a second, because so I am just a culture fanatic. I don't know. It's something that I care so much about. Having had, innovation executive roles in a variety of institutions within financial services, there's so much focus, I think, on the technology, which of course there needs to be, but my biggest kind of gripe with all of this is the cultural component. So you can have the best strategy. Maybe your tech needs some updating. That's definitely the case. But if the culture piece isn't right, if people are on board and part of this, it's not going to happen. So the concept that you at the core had this culture that was Yodel, and this was Milind's brain and how you guys operated. And then you said, hey, let's go do micro versions of that. That's bringing the core, but with maybe the own local flavor, right? So Scottsdale has their own, or Charlotte's has their own. I think that's really crucial, because I also talk to friends all the time about the idea of if they're joining a seed stage or Series A company, the culture is one way, and then all of a sudden it becomes this behemoth, and then they get out because they're like, it's just not the same culture, it's not the same people, it's just a different vibe. And so the idea of dispersing that team from a geographic perspective is really interesting to me. So any other lessons learned back to those Yodel days, back to the 2008 time that would, think would be interesting from an entrepreneur's perspective?
Yeah, I think one of the big, not even just lessons, but fundamentally what Yodel changed in me was, as an entrepreneur, to have focus on revenue. We are a very strong team that focused on revenue very earlier on. And maybe you call it Scarlett, maybe that's the New York kind of way of life, that compared to kind of valley entrepreneurs, right? Like, we were always focused on revenue, and that has really served me well kind of throughout my career. So I think that was one big lesson, is that as we were scaling the company, we were really focused on the revenue aspect and the product market fit aspect, and we didn't raise a ton of venture capital throughout the life history of Yodel. And the reason for that is our ability to be disciplined. So I think that was really very important. And then the second thing that was really a big takeaway for me was, going back to culture. We really had a very strong culture where we introduced a few things in our sales organization. We were known as one of the best inside sales teams in the country. And the reason for that is we had very innovative kind of sales plan, but also the culture. So for example, with every new customer win, there was this culture of gong, and that was something that is very important. And then the other aspect was the team dynamics, right, where you had competitions between teams and things like that, and that really kind of created a very big camaraderie at the company. And that kind of spilled over, going back to another point you made, which was local. How do you kind of infuse local culture into it? So for example, our Austin office, we used to offer lunch that had barbecue as one of the main kind of items, and that used to be a big kind of cultural draw, and like hiring draw and things like that. And again, this was back in the day when work lunch at work was not the thing, right? And then of course, like, Google popularized it and stuff like that, right? And so it was super interesting to see those dynamics around sales achievement, but also simple things like, how do you kind of build that camaraderie both on the professional side, but also on much more on the human side?
Yeah, it's interesting because the lessons and things that you implemented as part of your strategy, from bringing small businesses online to the cultural components, and the idea of like the team lunches, is definitely, it's so cool to see all these years later that these things are being implemented in many different ways. I was actually having, and we'll have this later, a conversation with Sylvan yesterday around things like stand-up meetings every day, and the fact that that some things happen on the tech side that now is applied and applicable across industries, and how it's really not about technology, it's about practices and behavior. So that's kind of an interesting perspective. So let's pull this now a little bit more to the present. So even though there's been so many correlations between what happened in 2008 and now, so we're back here. It's 2021. We're, depending on where we are in the world, obviously this crisis is still very front and center, but in the United States, we're kind of a little bit on the tail end, hopefully, of it. During this time, so let's think about Yieldstreet for a second. The last year has been there's been a huge inflection point for you guys, and crazy growth, right? So I remember when I was talking to your team, and we talked a little bit about this last time with Tech Tuesday, that I think from up until April 2021, that you've seen over 250% growth in terms of investment requests and new investors, which is crazy. So here's a common example today now of people moving to that digital world. In this case, we're talking about investment. Can you talk a little bit about that? Like, what are you seeing? I mean, from a Yieldstreet perspective, but then if we go out a little bit from a macro level, let's talk about like the digitization of the world and how people are moving to digital and response, and kind of being forced to because of COVID.
Yeah, so I think Charlotte, bunch of things. So Charlotte, like, I'm already in my vacation mode. Scarlett, talking about Charlotte, North Carolina. So Scarlett, listen, I think the trend around digitization, in my opinion, started almost a decade ago, right? Like, if you think about last decade, was really the decade of tech. And what I mean by that is, 2010, there were only three tech companies that were the top 10 companies by market cap. which were finance companies. Were tech companies. Exiting the decade, 7 out of the top 10 companies in the world by market cap are tech companies. And what really happened in the last decade? Mobile. That changed the game for everybody. So you could hail a cab, and book a restaurant, find friends, do whatever you wanted, right? Book your travel. And that fundamentally changed how people lived their life. That shifted consumer behavior. So obviously finance is a little, always lagging, and what you do with money 2020 and like a lot of this thought leadership type things is always pushing the envelope, right, in terms of innovation. So mobile changed the game, and that really started the revolution that we are seeing in the last 4 or 5 years. So for example, I'll give you, bringing it back to Yieldstreet, right? We launched our mobile app, which we were the first alternative platform to do so almost 3 or 4 years ago now. One of our first investment requests, Scarlett, came from the middle of Lake Michigan. So the reason I'm giving that example is, think about a fundamental shift in how people think about financial services, which are typically thought to be like, hey, you have to go to a bank or go to a financial institution or go to a financial advisor. So now you have people investing tens of thousands of dollars, maybe sitting in the middle of a boat with their grandson or their son fishing. And when we launched an investment, they had ability to get educated, learn about that investment, and invest. So in my view, I think financial services is on the cusp. This decade is going to be the golden age of fintech. And we are already seeing some of those things happening. And we're going to speak a little bit about what those innovations are. But I think, I am super excited with regards to how digitalization has happened. And then my last point, which is what you ended it with, was COVID. COVID was the accelerant to digitization of so many things, and financial services is going to be no different. And you're seeing some phenomenal numbers just in terms of what things people are doing differently today, versus even a year and a half ago. So I think, yes, COVID was like really that kind of catalyst, if you will, right? And uh, you know listen, this is kind of an interesting analogy, right? Obviously it has devastated the world because of the nature of what has happened. But if you think about the virality component, right, in a positive way, it has accelerated the digitization and been a catalyst for that digitization, because we are just living a very different life and a very different way to communicate with people.
You are so right. There's so many points that I want to hit on there. I was trying to find, because I wanted to make sure the stat was right. So COVID, like you said, it's one of those like totally opposite things, and so the devastation and things that have happened are terrible, of course. But because of COVID, because of this kind of lockdown, I've seen, especially from the financial service lens for a second, you've seen this a crazy amount of acceleration. So where most industries had trouble, fintech accelerated because of this. And there were huge subsets of the population, right? Like if you think about, you go to boomers for a second, right? And one of the reasons, back to this idea of these smaller institutions and community banks, like they've always served them very well, because they're the type that really love to go to their local branch and still have those one-on-one conversations. Because of COVID, they couldn't. So they had to move to digital. But with that, there's my thought there is a fewfold. I mean, we've seen across the board data shows that they're there. Some of them will still use those in-branch experiences for some specific things, but for the everyday stuff, where maybe they'd be getting on the phone and calling, which I don't know if you all are aware of this, but the number of call centers for people to call about their balances still is crazy. Like it's a really big thing. So the fact that, now through COVID or whatever else, they've got comfortable with these digital things. Now they don't need to make that call anymore. They can just go look online. I was talking to the team earlier. I had a personal example of this. So not to try to call her out, but my mother-in-law started using Venmo as in response to COVID. Nearly 70 years old, have, a great group of friends, and they were talking about doing some virtual event together. And there was an exchange of money. It was like $100. And so she got on Venmo. I set her up with Venmo a while ago, just kind of like let it go. And then she said to me, oh, whatever her name was, Karen, I sent Karen money, but she's saying she didn't get it. So she's like, I've tried 3 times now, Scarlett, but is Karen saying she's not getting the money? I go look, her name was something as literal as like Karen Smith. Of course, there's like hundreds of Karen Smiths on Venmo. So she sent money to the wrong person. And so there is this whole thing about, with this move to digitization, I believe that there needs to be a level too of education around what's happening, because it's great getting them on there, but there's kind of sometimes a lack of what's happening. But the other side of that too, just kind of naturally through that, is the fact that once you got them on there, they're now used to these new behaviors. How do you expand that? And I think one key thing that I took away from what you said, you talked about the people in Michigan sitting on his boat and doing an investment there. It goes back to convenience, right? And I think this is something that the incumbents are trying to do and just having a really hard time with. They say convenience, but it's not a convenient experience. It has to naturally integrate into their life. And I think that's one thing that you've really prioritized and the team has prioritized, is making sure that happens. So it's kind of crazy. So just because I gave you kind of a personal example, I'm curious, because you've said a lot of things, by the way, that I feel like you're Nostradamus, and you'll see what I mean in a few weeks here, because you mentioned the idea that this is a decade for fintech. There'll be some stuff coming out in the next few weeks that I'm definitely going to tag you on, because you've said it here first. But when you think about this move to digitization, where do you see the risks? How do you think about it from that perspective? Because obviously there is a ton of opportunity, but where do we need to be thinking a little bit about more from the risk side?
Yeah, it's a great question. Listen, Scarlett, I think risk really depends on what are really the ways people are engaging, right? And so, for example, if you think about getting millennials engaged in the stock market is a great thing. And apps like Robinhood, Acorns just yesterday announced they're going public. It's a great. Greycroft is an investor in us and in Acorns, so great to see some financial services wins. But I think if you think about what they're trying to do is just really popularize investing with the younger generations, right? And you said this, that boomers are sitting on a lot of wealth that's going to get transferred over the next decade to generation X, Y, and Z, right? And it's in the tunes of almost $30 trillion, $30 to $40 trillion. So there's just a lot of wealth there. So you have to obviously think about risk from that standpoint. And risk comes in going back to another point you made, which is education. So for example, what happened with GameStop and AMC, and it continues to happen for the last 6 months, right? And you have people that would do really well, but there are going to be majority of people that may not do well. And you see it in online forums where the people say, oh, I took my parents' retirement and put it in AMC, and now I'm left holding the bag. So that thing, so those type of behaviors, you really have to be very responsible as a financial technology company. The other aspect of it is thinking about newer technologies. So crypto is another example, right? And how do how should you think about it? And with the type of adoption it has seen in the last 18 months, that's another way. Like how do you kind of really, again, comes down to what's the education that you have to really think about. So at Yieldstreet, as you know, we are really passionate about kind of content creation and education and things like that. And we feel that educated consumer is the best consumer. So I think that's really where I feel that you have to think through risk and education and how they kind of go hand in hand in terms of like really making sure that the consumer knows what they're really kind of interacting with and getting into.
Yeah, we're definitely going to get to crypto later, because I really want your thoughts on some of the stuff that's happened with the volatility in the last few weeks. But on the idea of the educational component, it's, I think part of it, I've been in financial services now for some time. I did not see myself going here, by the way, but here I am, because there's so much amazing things that are happening in this space. It is crazy to me that people, seasoned executives, veterans in financial services, still have like uncomfortability when it comes to investing. And I think that there's almost this like taboo of the fact that, well, if you're in financial services, of course you know what it is, you know about your investing strategy. So they're afraid to talk about it, which is why these educational components, I think, are so crucial, and especially in a way that is easily digestible and understandable. So the other big point that you made, though, I have to get to, is the idea of the transfer of wealth, right? So you said, 30 trillion bucks. That's a lot of money. coming from a former banker's hat, something that we've focused a lot on is the idea of attracting the millennials, attracting the Gen Z. One of the things that started happening was, well, there was a lot of challenges as to why that was not an easy play. And that's why some of these neobanks and everyone else came and kind of ate that lunch. But one of the other things that started happening was, and I was in a lot of these rooms, is, let's be real, these millennials and Gen Zs don't have money. They're not profitable customers for us. The key was what you just talked about, though. So maybe not now, but if you win their hearts and minds now, they got a ton of money coming their way in this, this next wave, which I think is super important. And the other thing I would love to get your perspective on, because you seem to be always ahead of the game when it comes to the behaviors of whether it be consumers or small businesses. So I will speak myself here as a millennial. I know you got some of them on your team too. We've been through a lot, right? When just getting out of college, around there's a whole thing around geriatric millennials. So I don't exactly fit there. I'm a little bit below that, but close enough, right? So getting out around college, around that last financial crisis, here we are again in another crisis. You've got all this stuff going on. You talked about GameStop. There's so much that gives pause and hesitancy there. I'm just curious, when you think about these next generations, whether it be millennials or the one after Gen Z, how do you think about their behaviors and how they interact with and connect with their money?
So, listen, I think it is going to be digitally native, digitally first. There is no doubt about that. So think about what Fidelity did last week, right? Fidelity announced that now parents can issue trading accounts for their kids, which is what companies like GoHenry and a bunch of companies are in that whole space are doing, right? Which is to really impart financial education. And I think fundamentally, my belief really is that even curriculums today don't include this, but high school curriculums should absolutely have financial literacy and economics. Some high schools do have economics, but financial literacy classes in middle and high school, because today's Gen Z and even younger kids, they're technology first, right? And today they're holding the phones at the age of 3, 4, 5. And so fundamental shift that's going to happen is it's already happening. So how can we not change and really kind of, and I think they're going to be smarter consumers, right? So my son, this was like probably 3, 4 years ago. His first trade on Robinhood was the stock was Lululemon, and it was super interesting. And we were in Europe in the summer, and he said, hey, his thesis was like, hey, summer people are out and about, they're going to have a great quarter and things like that. Like, so you could just see his, this guy, this person is like 11 at the time. He was like 11 and 12, and it's like, oh, like thinking through that process was so interesting, right? So that's going to happen. The second thing, really that you should think about is what you just said, right? Which was, all of these generations are inheriting a lot of wealth over the next decade or 2 decades, right? So that investor education is going to help you to keep those customers longer term, even though they may not be profitable now. So now, listen, shameless plug for Yieldstreet, right? So what we tried to do is we went the opposite side of the spectrum when we started the company, which is we said, hey, we want to go after accredited investors first, because they also don't have access at their level. And they are a harder to reach consumer than a typical younger generation, right? And if we can make it work with them, then we can pull back the curtain, right? And so that's what we did, is we went after the accredited investor, population, which is still about 13, 14 million people in this country. And we've been very successful, doing that. And so if you think about traditionally the types of alternative assets that are available on Yieldstreet would be available only to people who are 65, 67 years of median age. We have now pulled that curtain back to 41 on our platform, which I think is super fascinating, right? So it supports the theory that you have, is that, listen, our view is that if we get this demographic over the next 10 years, they're going to stay with us, and that I think really also, jives really well, is that now we've opened some of our products to the millennials as well, right? And so the thesis really is that we want to expand and service almost 50 million consumers in the next 5 to 10 years, like as they take their financial journey.
So You hit on a few key points there. So we're getting a little bit into access, right? Because that's part of it. Even thinking back to the questions that you answered in the Tech Tuesday in terms of inspiration, you mentioned some neobanks and some things around there. Access is a big thing that I think fintechs more broadly are focusing on. There's this next generation of neobanks looking. You have the first ones with the simples and the move-ins. Of course, I'm gonna have to have a preference there because when I was at BBVA we acquired Simple, and then you get the next generations with the Varos and the Chimes and all of these other ones, and now we're seeing that next iteration with the daylights for LGBTQ. You got the first Bolivars for the Black community and the Greenwoods. What do you, just more broadly, not maybe specifically about neobanks, but what do you think more broadly about this access component with the fintech landscape more broadly? What are you thinking when you think through that with what's happening in the space?
I think it is super interesting because financial services in general is quite fragmented, right? There is a different type of consumer looking for a very different type of product. And it's not just about wealth management, including core banking and lending, right? And so there are different ways to kind of skin the cat. So the question really becomes, are you looking at kind of volume or are you looking at impact? Like that's kind of how I think about it. And when you think about volume, it's like, broadly speaking, financial inclusion is the underlying theme of all that, right? So when you think about challenger banks, this thing, okay, traditional banks are not reaching this, this consumer. Can we do that in a digitally first manner? You mentioned a very important component earlier in our conversation, which is the role of community banks, right? And how they reach, not only small business communities, but rural areas, in our country. So I think that aspect of volume, where you have tons of people adopting the technology or a new way of doing things, is super interesting. The other aspect of it is also impact, right? And when I say by impact, what type of impact you have? So at Yieldstreet, we speak a lot about what impact we are having, right? And the idea really is that we are providing you with income generating products to complement your other investing portfolio, and you're getting your interest on a monthly, quarterly basis, and that can help fuel your life's ambition. So whether you're saving for vacation or a second car or a house or whatever may be the case, can this kind of fuel your life's ambition? And that's kind of what I say is that access kind of leads to this whole concept of self-driving money, which is do it for me. So what robo advisors did for kind of ETFs and index fund industry, can we now do that for alts and all types of assets, right? And self-driving money is that, okay, I'm investing, but I'm also getting my returns, and can that return fuel some of my life's passions, right? So it's a very, very interesting component, which is really kind of tying the education piece to access piece, and then to the, okay, what's the net, like the net impact on the consumer? Like, is the consumer really benefiting from it?
Spot on there. The idea that self-driving money is such an interesting concept, because we talked a little bit about the educational gap, which I do see a question here that is related to education that I want to share with you from the audience. But just quickly on that concept of the self-driving money. So it's important to be aware of what's happening. You're not blindly investing without understanding the components of what you're doing and the potential impact it could have, especially like we're talking with this big transfer of wealth that's coming. But I will speak for myself like this, and I think there are many others. I want to understand the fundamentals, but I don't want to be checking in on this every single day. I don't got time for that. We all have too much going on. So the idea of like, you have a maybe high level thesis, you understand the overarching components, and then you just let it work for you, I think is one that definitely resonates. So quickly, I'm going to read this because I want to make sure I get it right. This is from Keisha. What are some examples, advice you can share on how to approach the educational component? What have you seen that has worked and not worked?
Yeah, so I think great question. So as I was telling you, we are very passionate. So our dream, and we are not there yet, our dream at Yieldstreet is, can we create an experience where Tech Talks meets Khan Academy meets Investopedia? So Tech Talks is like just inspirational aspect of it. Khan Academy is making complex things simple. And then Investopedia is about delivering them in the most easy to, easy to access manner, right? And so that's really the dream. So what really has worked, in my opinion, in the last, I would say last 5 years or so, is just blogs and contents that distill complex things in a very simple manner. So think about the role of Nerd Wallet. Think about podcasts like Bigger Pockets and things like that. That has changed because traditionally Wall Street operated on research reports and all of these very complex documents. Now bloggers are like distilling that. That's, I think, is really working. Scarlett, what you're doing is phenomenal. It's a phenomenal service. Like, just to be able to talk about these type of topics, that's really working. And so how do you kind of, in today's world, which is like we all have ADD, we consume content very differently. How can you kind of create things which are webinars, short form articles, long form articles, infographics, do it in a manner that can reach consumers faster? So in my opinion, like that's really is working, and we should continue to kind of evolve and develop that. And then obviously you have seen blogs can take various shapes, and Reddit really has kind of taken it to the next level, where there is a lot of transparency, and then is the wisdom of crowds, right? Like that's obviously creating certain outcomes and behaviors and things like that, which I think is also super interesting, because that is driving transparency and accountability into the system.
Oh man, you could not have teed up my next thought better here. Thank you for that. Because you hit it right at the end, because I want to be mindful of your time. We don't have that much time left, and we cannot end without going into what's been happening for the last few weeks, which goes into all this idea of bloggers, other ways to digest information in a meaningful way that connects, that like resonates because it's authentic and real. Now, the downside of that potentially, so you brought in Reddit too, right? So obviously we know the impact that they had with the game, the GameStop piece, and there's some other stuff that they've done there as well. What are your thoughts about, okay, the news is going nonstop about our friend Elon. I wish he was my friend. He's not my friend. Elon Musk, right? And the fact that the influence that he has and what he's utilizing his social platform to do in the volatility of crypto. So just when you think about that, what is your take on the volatility of crypto and the impact that social has on that? I mean, should someone like Elon Musk be able to impact the markets that way? Like, I'm curious how you're thinking about this.
Yeah. So Scarlett, I think this is a pretty serious question and serious topic. I feel so. Let me address the volatility of the crypto market. So listen, I think if you asked me the same question last May, my answer would have been, listen, my views on crypto are depending upon the phases of moon, or on which side of the bed I wake up, because I don't know. Someday I'm very bullish, the other day I'm not at all bullish, right? I think where I stand today is digital currencies are here to stay. There is no doubt about that. They have a lot of applicability in how we could lead our life and interact with financial products in a faster, better manner, mostly from an infrastructure and just like the movement of money. So I think they're here to stay. I think generally all currencies are not the same. So I think consumers need to really, really understand that and make sure that they know what they're getting into. So really, I think the top, I would even say 5, not even 10, are something that has wide adoption and are continue to adopt. So I think that's going to be something that we should think about. I think the applications of blockchain can also drive digital currency adoption, right? And application of blockchain is going to happen. By the way, blockchain is going to have a massive impact. We should probably do another episode on just like blockchain's impact on financial services. I think it could be fascinating because there's a lot of work being done there, and I'm a big believer in that. And then finally, your question around impact of social media. I think it's a double-edged sword. We have to be really, really careful. And I think my general view is that financial matters are pretty serious matters. And what I said about like GameStop is applicable in this context also. Listen, this is, people are putting fiat currency into buying these things, right? And it has real impact on people that may not really understand or may not have the wherewithal to bear those shocks to their system. So I think we should take it very seriously with regards to how we are using social media to really influence and talk about especially things that are volatile in nature and can have deep swings. So I would just caution your audience to be very careful about truly when it comes to money, the money is very real. So really take a step back and like think about what you could do. Example, when I'm thinking about angel investing, I'll sometimes get a deck that will say, hey, Sequoia is in it and Excel and this and that, like big VC firms are in it. I always can get carried away by that, right? But I have to have my own thesis because, like, listen, they are great firms. Obviously, we all know that, but they have 100 other investments. You don't know, how this fits into their overall investment thesis. And so I cannot peg my decision just for the fact that Sequoia is in this deal because, obviously it's a very different model, right? So I would like urge your audience to be really very careful when they think about, crypto and how it would impact their own kind of wallet.
Yeah, it's so interesting because I have a very large family on my father's side, and none of them can clearly articulate what it is that I do. They don't understand this world, but they know that I'm in finance and fintech. So everyone is coming to me about crypto now. It's like, oh, I'm getting into Dogecoin. I'm doing this. What do you think about this? I'm like, I cannot give you feedback on this stuff because it's just I don't want it to be tied to me. Like you have to make your own decisions. I don't know enough about what else you got going on. If you have 10,000 in savings and you're putting all your money in there, no, you should not do that. But it's like, I can't sit here and go, it's just so interesting because I get on some of these family threads and to hear, and they're like, Scarlett, you're the one in finance. Give us your thoughts. I'm like, my thought is don't put it all in one basket. That's what I can tell you. You each have your own unique theses. I can't say, collectively do this or do that. So there's a lot to think about there. Last question while we have you. It's going to be another big one. So sorry about that, but we are recovering most of the world. Obviously, we are very aware of the countries that are still very much suffering, but recovering from this pandemic. And there's outside of crypto, you've got potential housing crash and shortages. You've got inflation. You made a bold statement. I will tell you that I agree, as it does in this case, Money 2020, about the future of fintech and fintech being a big move for this decade. But from your perspective, with all of these other kind of volatilities around us, how does fintech continue this like crazy positive upward trajectory?
Listen, I think for us in this ecosystem, Scarlett, I'm a firm believer that you really have to focus on core processes that you're impacting, right? And fintech obviously is a very broad term, so it can mean anything from financial inclusion, which we spoke about, all the way to kind of wealth management, which we also spoke about, but also banking as a service, right? So are you reaching the right audience? Like, is it easy for me to enable certain banking services? And so in my view, the way fintech continues to do this is to not really focus on short-term trends where, is there a crash coming in the market? Asset values are so high. What about inflation? There is so much money in the system. Ultimately, it's all about like, hey, the convenience thing that you mentioned earlier in the conversation, right? Am I like improving your use case or your life just because of use of technology, right? And is that really kind of been added to my life? So if we continue to focus on that, I feel that the future of fintech is very bright, and I am a big proponent that we are entering the golden age of fintech, 2020 to 2030. That's really going to be a huge huge time for us, and I think it's the right time, and the reason why I'm saying it's very ripe is because if you think about the last 10-15 years, we speak a lot about fintech, but outside of kind of digital currency and blockchain and digital payments, there has not really been true innovation in fintech, right? And so now you're beginning to see banking as a service, different types of investing apps. I actually not to digress here, but I got an angel proposal where the company, what they're trying to do is, you walk into Whole Foods, they will let you buy $1 of whole food stock because you're using Whole Food as a utility. So there are interesting things happening, and they will all become mainstream in my view in the next decade. So I'm super excited about that.
Love it. And that goes exactly into convenience and usability and connecting, making your, self-driving money, right? There's a whole concept of you,
Yeah.
they know by your behaviors what you're doing. So you're supporting those businesses. And so why not support them from your investment thesis? Oh, so many great things here. We definitely need to have a chat around blockchain, just to synthesize the end points to around the banking as a service. I mean, I think that for those who are not deeply embedded in the space, and you start getting into infrastructure, it's like the most unsexy, boring stuff, but it's so fundamentally important for the future of our industry. And I'm in total agreement with you that this will be the golden age of fintech. Oh, Milind, so many key takeaways here. Thinking through the past, the fact that you want to make sure your culture is moving throughout the organization, the strategy around that, how you can make great situations happen from challenging times like pandemics or financial crashes, and the digital is the key to the future with the right educational component in a way that is authentic and meaningful. Thank you. Thank you all for watching. I'm sure if you have other questions, you can reach out to the Yieldstreet team. They'll be happy to answer. If you have questions for Milind and I more broadly around this crazy world that we're living in, we'll get to that too.